Hi everyone, you're welcome back to another Transition Moment by Itunon Peter. I welcome you guys to another episode on business. Early this year, we'll be treating a lot of topics, a lot of episode on business. So today makes no difference. So just chill with me and go through with me because at the end of this episode, you're going to learn a lot of things on how to be profitable with loans, how to bank on loans in order to improve your business productivity and profit. So today we'll be talking on bank loans, investment and debt. But before I go, I want to share us this little story. 2010, then I was still growing up, though I'm still growing up, but you can't compare the growth then to here. Enlightenment. Now, 2010, I watched a Nollywood movie whereby a successful businessman went ahead and got a loan from a bank in order to invest in his business so that there can be more profit. But unfortunately for him, he was unable to pay the loan at the estimated time. So therefore, I think the man uses his company, then the house as collateral. Life happens to him one way or the other. I guess it was doomed like that. So when he was unable to pay back the loan, the bank actually took everything away from him. And if you would agree with me that then the script writing for Nollywood was kind of somehow as at then. So that same 2010, my mom, she used to send out building materials, constructions like that. So we have this block industry where we produce block for building. Then she herself, she wanted to buy more trucks so that there can be more availability of sand and there won't be disappointments. Get so mom then she went to bank to get a loan because I then as little as I was then I was interested in that business. So I got to know some things. So that year we went to Lagos, to bust that trailer to carry sand for us. So while we were about to get home that year, I remember the movie I watched about bank taking everything away from the man. Then I asked my mom a simple question. I said, "Ma, did you borrow this money from the bank?" She said yes. I was like, ṣé wọn ò ní wá gbé ẹsẹ̀ lélẹ̀, like hope they won't take the house away from us because that's our precious house now. I was kind of scared that if my mom is unable to pay the loan, she like when the bank comes, I was young, so I was scared. You know, I thought that was how bank loans are usually be. People are unable to pay. But then I discovered that there's difference between loans, debt, and investment. The difference is this: a loan is a money gotten from the bank that is being spread for a certain period, like month, and you will repay back with interest. Loan are what you get for business, so it has to enhance the productivity, the profitability of the company or the business you want to venture into. Then debt, debt is the money that you owe someone with no or little interest in paying back, because people in debt, there are people you chase around. Okay, where's my money? They don't have the intention of paying back. They might have the money, but they don't just have the interest of paying back. Then the debt will be increasing with time. Why investment, it's where you put your money into your funds into something for a period of time so as to get profit over time. That's the difference between the three. So as a business person, you can't by yourself fund your business with your personal money. Reason mean that your personal money should be different from your business funds, so that there will be clear difference that, okay, this money I'm using it for business, let it be like that. This money is my own personal money. Now, looking at all these rich men, Dangote, Otedola, and so on, you see that they tell that Dangote owns certain amount of money for the banks. Now, look at Dangote, look at his net worth. You feel like, why should Dangote still be borrowing money? He's the richest man in Africa. But is this, you can't now, Dangote cannot be using his personal money, his personal funds to, to run business all the time. He needs help from other aspects, because now when you get a loan, he has another source of many source of income to pay back the loan. The cement factory is there, the flour factory is there, the Indomie flour, everything is there in place to pay back the loan. There is a guaranteed source of income that, okay, if I get this loan from the bank to venture into this business, there's another business that will help me to repay the loan. So all these people, they are not stupid getting loans from the bank. It is we that we see them as the richest men. We think they should use their personal money to run their business, that are kind of, that are acting in ignorance. Your personal money are the money you spend on yourself, to get your clothes and so on. But to run a business effectively, that's where the bank loan, get loan from the bank comes in. But have it at the end, have it at the back of your mind that you need to pay back, and it will come with interest. But how will you now feel, or how happy will you be? You get a loan from the bank, you that you manage like 500 stock before, you increase to like 3,000 stocks. One, your business is booming, you're growing, more profits as well. So you be paying the bank loan, the money you get from the bank won't be difficult, since you have sort of income. Bank will not just wake up one day and say, okay, we want to take over your house, you want to take over your land, because that's what you use for as guarantor to secure the loan if you're paying back. So as a business startup, as a business owner, don't incur debt for yourself, because debt leads to death of business. Loan is something that every business owner does. Every anybody that is venturing into business, they seek loans so that to increase their productivity. So please don't incur debt on yourself on your business. Thank you for watching this video. See you guys in the next episode. Thank you.